Today we're going to take a look at the stock of Klarna. That's Klarna. Is it something worth looking at for your portfolio? Here we are on Klarna's page on investing.com. They are a digital bank, so they don't have any branches per se. They're all online. They're based out of London. They operate in the UK, the US, Germany, Sweden, and other parts of Europe. But their main areas that they operate is the UK and the US, and through Europe. So they're a digital bank. That's what they do. They're in the finance industry. Let's take a look at their numbers. They currently sit at $20.52. Most recent move, which would have been Friday the 6th of February, was up 0.8%. Not a huge bounce considering the move the market made on that particular day. The 52-week average is $20.10 up to $57.20. This actually does, it's a little bit of a positive sign. This is the first place we look, it is nearing that 52-week low, so that could provide some support for Klarna. So it could provide some support. Oftentimes it may dip slightly under before it goes up again. And we're actually seeing some action live here as I'm recording some after hours. It's up another 0.88%. So let's jump across to fair value now. So it's sitting right there at the bottom of their 52-week range. Fair value puts it at 1943. So that's a potential downside of 6.2%. The uncertainty around Klarna is high. So this would, if you've follow me on YouTube and you've seen my videos and stuff, this would fit into a speculative stock for your portfolio. If you're wondering what I mean by that, comment below and I can go through all of that. But for the sake of this review, I won't add that video into this one. The spread of Klarna is 13.64 up to 27.52. 17 analysts have reported on Klarna with the average price target of $43.29, which is up significantly, 100% gain from where it's currently sitting. That's the analysts reporting there. When we come down here to the bulls and bear signals, it's heavy on the bear front. RSI is the only bull signal suggesting the stock is in oversold territory. However, the rest of the signals are all bearish signals. The stock has taken a big hit over the last week. It's just had downward momentum. It's had downward momentum, and you want to know that it's finding a base, really. That's what you're looking for, is finding a base. Seldom can you buy a stock at the very bottom and you just go up from there. If you do, man, that's awesome. But oftentimes you may find a bit of a base and you can jump in, understanding that it could go further down because that's the way the momentum's gone. But it is momentumly going down at the moment. Net income is expected to drop this year. Not a good sign. And analysts do not anticipate the company will be profitable this year. And that's a big thing for digital companies, for tech companies, is they do spend a lot in marketing. They have a lot of expenditure, and it can be quite some time for them to actually turn profitable. So now let's look at Klarna short to long term. In the past week, it is down 10.4%. That's that downward swing that we talked about earlier. In the past month, it is down 34.7%. In the past 3 months, it is down 44%. This is that downward momentum that's just been happening in the past while. In the past year, 55%. In the past 5 years, it is down 52%. In the past 10 years, it's down 44%. So, looking at Klarna, should you get it for your portfolio? I'm going to put several caveats on this. Everything points to there's other places you can put your money, okay? But this is not financial advice. This is just my thoughts, okay? So let's take a look. Firstly, it fits into the speculative category. So if you have one or two other stocks in your portfolio that fit into that category, I cannot recommend it. So it fits into that category. This is speculative. It fits into the category of you can't invest in this short term. You've got to be prepared for the long term. You've got to be prepared to hold it 5-10 years. Now, if you see a big rebound in the next 6 months, so you see a big rebound in the next 6 months, then sure, I would probably go ahead and just make it short term and take the profits, take some money, okay, take some profits off. And so, but you've got to be prepared to go long term. And thirdly, finally, is you've got to be prepared and ready to handle some volatility. The truth is I don't see. There's got to be a catalyst that's going to cause a rebound, and versus just, fair value's down. It's got the momentum's down. Every chart the past 10 years was down. So you've got to have some catalyst that's going to send it upward.